What is a Spot Bitcoin ETF? A Spot Bitcoin exchange-traded fund, ETF, is an investment vehicle that enables everyday investors to participate in the price movements of Bitcoin within their regular brokerage accounts. In contrast to Bitcoin futures ETFs, a Spot Bitcoin ETF directly invests in Bitcoins as the underlying asset, rather than in derivative contracts based on their prices. Spot Bitcoin ETFs provide a regulated and accessible avenue for mainstream investors to engage with the digital currency. However, it's important to note that expenses, such as management fees and brokerage commissions, still apply. Nevertheless, these costs are offset by the absence of the time and exchange fees associated with purchasing and holding Bitcoins directly. Key takeaways: investors can leverage Spot Bitcoin ETFs as a regulated and more accessible avenue to capitalize on Bitcoin's price movements. Unlike futures-based ETFs, a Spot ETF holds actual Bitcoins. Enhanced liquidity facilitated by Spot Bitcoin ETFs has the potential to contribute to more stable prices and simplified price discovery in the Bitcoin market. Bitcoin spot ETFs might incur higher expenses compared to other funds, attributed to the costs associated with securing and trading cryptocurrency. After rejecting multiple applications from crypto asset managers, the SEC granted approval for the first 11 Bitcoin spot ETFs in January 2024. While various countries have embraced both types of ETFs, U.S. regulators initially showed reluctance due to concerns about market manipulation and custodial risk. The U.S. Securities and Exchange Commission approved the first Bitcoin futures ETFs in 2021, followed by the approval of the first Bitcoin spot ETFs in January 2024. How Spot Bitcoin ETFs work. Spot Bitcoin ETFs securely store Bitcoins in a digital vault managed by registered custodians. The primary objective of this type of ETF is to mirror the price movements of Bitcoins in the cryptocurrency market. To initiate the process, the ETF acquires Bitcoins either from other holders or through authorized cryptocurrency exchanges. These tokens are then stored in a digital wallet, employing multiple layers of security, including cold or offline storage, to mitigate risks such as hacking. Subsequently, the ETF issues shares corresponding to the quantity of Bitcoins it holds. The ETF share price aims to mirror the prevailing market price of the cryptocurrency, and these shares are available for public trading on traditional stock exchanges. Thus, the ETF shares closely track the price of Bitcoins, and the ETF periodically adjusts its holdings by buying or selling tokens. Authorized participants, APs, usually large financial institutions, manage the creation and redemption process of ETF shares based on market demand. If the ETF shares trade at a premium or discount compared to the actual price of Bitcoins, APs create or redeem ETF shares in significant blocks, effectively arbitraging the difference to align the ETF share price with the cost of Bitcoins. For investors and traders, purchasing a Spot Bitcoin ETF is akin to buying shares in any other ETF or security. The market remains liquid and efficient, due to continuous efforts by market makers who provide buying and selling opportunities for ETF shares. Their role is vital in maintaining a stable market, ensuring that investors can easily trade ETF shares as needed. In a broader context, Spot Bitcoin ETFs offer increased opportunities for institutional and retail investors to speculate on Bitcoin without the technical challenges associated with managing a cryptocurrency wallet or the security concerns of safeguarding private keys.